Good morning, Alex Cole. How are you doing, my friend?
Good morning, sir. I'm doing well. You?
I'm doing well on this sunny March 10th. It's a winter wonderland back upstate. We got doused with some more snow. Just a quick reminder that we're not out of the woods yet, but
No.
family's doing well. How about you?
Yeah, everybody's good. Yeah. Parents flown in, so parents are in town, so we're gonna have some good
Fantastic.
times over the next few weeks.
You know, it's times like these when folks like us can be thankful for all that we have and the safety and the health of our family members. Really want to just extend all of our condolences and sympathies and empathy to the people of Ukraine and for everybody who's affected by this terrible circumstance. But Alex, why don't we turn our attention now to some charts, looking through GoNoGo's cross-asset heat map. Just looking at the trend. What's the chart telling you this week?
Yeah, so we haven't seen too much change in the way of the major themes. We're looking at equities in a no-go, of course. Same thing with Treasury bond prices here in the second panel. Commodities continue to lead. There was a big sell-off yesterday in some of the leading parts of the commodity industry, such as oil, but we still see that they're in a go trend. The dollar is holding on to its go trend, and Bitcoin is still struggling to make up its mind, you might say.
I know we're going to talk a little bit later in today's show about the executive order coming out of the White House yesterday, just in terms of cryptocurrency regulation, largely taken as a bullish or tailwind for the cryptocurrency space. But we'll come to that towards the end of this show. Alex, the other big piece of news coming out today was just the CPI at 7.9%. It's the highest rate in over 40 years. So inflation data coming from the Bureau of Labor Statistics here for the month of February reported today. We know inflation is being a real pestilence on the stock market. Why don't we take a look at the TNX, the 10-year yield? Just to give people an understanding of, central bank intervention to stem the tide of this inflation, which is really new to a whole generation of investors. Whether you hadn't been born yet or you were toddling around in diapers, inflation rising at 7.9% certainly is not familiar territory. So, Alex, from a go-no-go perspective, the trend of yields on 10-year treasuries, what are you seeing right now on this daily chart?
Yeah, it chopped around a little bit last week as it cooled off, price action did, and we saw it break the zero line into negative territory on the oscillator. We're right back at zero now, and price has found the go trend colors again, right as we get up to that 2% sort of level, close to the highs that we had a couple of weeks ago. Now, this could be looking as if it's setting in a higher low, and if we turn this to a weekly chart, you see that we've got a sort of a stronger run up here of the last few weeks with the oscillator above zero and potentially coming back to test that zero line again. So definitely inflationary pressure, some worries about inflation rising over the course of this year, really sort of making yields come back to where they were a few weeks ago.
Absolutely. For anybody who's been grocery shopping or filled their tank at the pumps, we can feel it on a day-to-day basis. And of course, the central bankers are planning to raise rates here in the United States at their March meeting, just to help cool off the economy and hopefully bring inflation back to that 2% target that the Fed has.
Yeah.
Alex, let's switch gears a little bit. Let's take a look at the S&P 500, the SPY, just on a daily basis. We've been talking throughout 2022 about this no-go trend, things chopping around and really staying below what would be meaningful areas of support and resistance for us to think about getting back in on the long side. Tell us a little bit about these red circles, the icons that are showing up above price as the no-go trend continues.
Yeah, I think it's important to just remember that the trend is a no-go, and people get excited when you have a 2% rally on a day. But unless you're playing on very short time frames, the overall trend in the S&P is down. And so what you're seeing as the no-go colors of purples and pinks here, price moves down, taking lower lows and lower highs, lower lows, lower highs. Go-no-go oscillator then primarily staying negative and finding resistance at the zero line, which is what we'd expect.
Mm-hmm.
When the trend is down, we wouldn't expect excessive buying, which would push the oscillator significantly into positive territory. So what you get when a trend is in place, in this case a no-go, and the zero line acting as resistance, you get indications, and that's these trend continuation red circles telling us that momentum has returned in the direction of the no-go. So every time the oscillator finds resistance at the zero line and gets turned away, we're seeing market action dictate that momentum has returned in a bearish fashion. So these are sort of no-go trend continuation icons that you see here above price on the chart.
Absolutely. Famed economist Mohammed Al-Arian was noted yesterday as saying, this is not a buyable dip moment, sort of reaching out to retail investors that throughout 2020 and 2021 had this learned behavior of anytime the index dips, that's a buyable moment to catch back to the long side. Obviously, we're looking more at the weight of the evidence than headline news, and we've been able to see now for several months that the weight of the evidence, the trend is to the downside, and we continue to see these surges of momentum, negative momentum, selling pressure with every rally. And I believe, volatility like this, Monday being the worst day since October of 2020, Tuesday being the best day since June of 2020. That kind of volatility doesn't exist in a healthy trending market.
Exactly. I was just going to say it's important to point out that these kinds of price swings are bearish in nature, generally. Being up over 2% yesterday and then down over 1% today, or just seeing these swings, like you said, in a healthy market, we have less volatility than that. So when you get these big rallies, we have to be careful because the trend is a no-go on the S&P.
So for those who are U.S.-based equity-only investors, let's take a look at what is working from a sector perspective. If we get under the hood of the index and we look at not just the trends across each sector, but their relative performance against the index. We can look to a GoNoGo RelMap, the relative strength of the sectors against the S&P 500 index. Alex, what is this chart telling you right now?
Yeah, so this one really, we've been talking about this for several weeks, even a couple of months to the beginning of the year. The story remains the same here in that your growth or your discretionary sectors are the ones struggling and pulling the index down on a relative basis. These top three panels are technology, discretionary, and communications. And you see now that these have been in relative no-goes since the beginning of the year. So that the S&P itself is in a no-go. These growth sectors are performing worse than the S&P. The relative outperformance is coming from the cyclical sectors, as we've been saying now again since the beginning of the year: energy, industrials, materials, and the more defensive sectors like staples and utilities. We did see financials roll over into a no-go just over a week ago, and that persists. We're seeing the pink no-go colors here in financials.
Absolutely. So let's take a look at what's been working. Obviously, XLE, strongest performer of 2021, strongest performer year to date. A lot of speculation about whether or not this trend is overextended yet again. So if we look at the XLE, the energy sector of the S&P 500, let's take a look at maybe what the trend conditions are telling us in terms of counter trend correction arrows and what we can learn from the GoNoGo oscillator.
Yeah, again, the trend is your friend until it ends, right? So the trend is in place. We're in a go trend. What we see throughout trends are healthy corrections, right? So as a trend moves higher, you don't go in a straight line. We know this. So as momentum cools, we're going to see these counter trend correction arrows, which just tell us that there may be a pause or a short-term correction or consolidation against the trend. And so as we've seen before in this move, when the oscillator comes out of its overbought territories, we see these counter trend correction red arrows excuse me, telling us that in the short term we might see a pause. And we're getting another one of those again now. After this strong rally that broke out of a go-no-go squeeze, we got the Go Trend continuation icon telling it was a relatively low risk entry point. We're now seeing a counter trend correction arrow, which, you know, like we overbought in an uptrend is not always a bad thing, right? Often it's a good thing. So we're not saying that this is a trend change, but perhaps in the short term, some pause for concern, some consolidation as investors digest gains here.
Yeah, as the energy sector meets with historical resistance levels, seeing that counter trend correction is quite well anticipated. Interesting to note, you can see on this chart, counter trend corrections can happen in price, as you see on the left side and here at the far right side, or can consolidate over time. And we've got those counter trend correction arrows there in the center of this Go Trend on the XLE. Where it really just paused to digest recent gains. And so what we'll be looking for to determine the outcome of this trend for the XLE is first and foremost GoNoGo oscillator, which is still trading on heavy volume. It's a dark blue line. We'll see if that maintains positive momentum or goes back to retest the zero line. Right. We'll look for support at the zero line. If all else being equal, the Go Trend is healthy to extend further price gains. First warning sign would be for GoNoGo oscillator to break through the zero line. If we see an abundance of selling pressure and negative momentum, then we could be looking at some chances for reversal in this trend.
Yeah, absolutely. Just like we saw earlier there, when it broke through the zero line earlier in the chart, it led to a more drawn out, lengthy correction and some no-go colors. So exactly right there.
Excellent. So what's driving the energy sector higher is, of course, the price of oil. Let's take a look at USO. And we see a similar counter trend correction off of that real parabolic spike in price action. What is this chart telling you?
Yeah, so oil really took the brunt of yesterday's correction in terms of the energy sector and the strong market rally yesterday, countered by the big drop in some of these assets that were doing so well, such as oil and gold. And what we're looking for, this is really playing out exactly as you just described, Tyler, with the XLE. You were talking about looking for the zero line to give us a clue now as to what is likely to happen next. So we're actually at that point on USO. We've had a really strong run. We've been working with these icons to get a sense of when we'll see a pause, when we'll see a resurgence. Now we're getting a counter trend correction arrow saying that in the short term, prices may struggle to go higher. And then we look to the zero line here. If the trend in oil is healthy, which, you know, so many people do, again, it's not our job to predict, but if this trend is healthy, we will see the oscillator find support at zero, and we'll get another one of these Go Trend continuation icons telling us that perhaps this was a buy the dip opportunity. If that doesn't happen, of course, and the oscillator crashes below zero, we won't get that trend continuation icon, and we'll continue to watch it play out.
Absolutely. So we've discussed on a lot of presentations, different webinars and training sessions about the importance of looking at multiple time frames. So as responsible technical analysts, we want to understand the predominant trend of the market, looking at longer time periods, and then moving down periodicities to look to time the most optimal entrances. So Alex, let's stick with the USO chart, but let's pull this down to perhaps a 30-minute bar so that we can see shorter term action and you know, potentially looking at a little earlier entry if we were to see the resurgence of momentum and the trend back in place.
Absolutely. So we were talking about this on Monday as an opportunity to still perhaps get into a trend that seemed overextended on a daily basis. It's perhaps even more valuable now, because if you're looking at that daily trend and wondering, or maybe you're of the opinion that it is a buy the dip opportunity, you would go down in time frame to find a better entry, and you're definitely going to get an opportunity to buy earlier on the 30-minute chart than perhaps you would on the daily. So we could be looking at the 30-minute now. We're going to stay away from from making sort of getting into this trend while we're in a no-go and while the oscillator is below zero. But if the oscillator gets above zero and we see a go trend on the 30-minute chart, that would in theory give us the chance to get into a new trend in oil a little quicker than if we were waiting for the daily to bounce off the zero line.
It also gives you a really clearly defined risk management level. If this enters the go trend on a short-term basis on a 30-minute bar, and you've got your stops in place, you're cutting those losses short if you have that risk management in place, looking at the shorter time frame, but can stick with the trend if it returns in the daily and weekly time frames to hold that and be a patient investor, as we always recommend.
Yeah.
Alex, this is great. We looked at a couple of individual names in Flight Path, the Monday research note that went out to all of our institutional subscribers. Believing that President Kennedy was right, a rising tide lifts all ships. This trend in the energy space, and specifically related to oil, has been playing out for a number of oil companies. If you've been working your scans, you've probably seen things like Marathon and Conoco, and there was one that popped out for us in terms of just beginning that new trend, Valero Energy Corporation. So Alex, talk us through this chart as well.
Yeah, and I liked the look of this one. I did have an annotation on here, so I'm sorry that it didn't show up, but I can quickly put that on. But what I was looking at on Monday was, as we saw what looks like to me a bull flag type of situation, reaction against the trend, and then being broken here. So we were looking at this on Monday, having broken above this downward sloping counter trend channel. And then on the Tuesday, we did get a go trend continuation icon. So, but you see Valero is not at the highs it was at a few weeks ago. So the idea was perhaps, as you said, a rising tide can lift all ships. It'll play catch up. And we were looking for a way to get into that oil trade, perhaps with something that was yet to really take off. Now, in the couple of days that have followed, obviously yesterday's reaction lower, and today we're back at that zero line. So we will look again to make sure that this is finding support if we're then to see this make an attack on this prior high.
Fantastic. Now, Alex and I are both human beings and can't help ourselves from reading and hearing the narratives that come across on Wall Street. And we talked several weeks ago about a Chilean lithium mining company that is really driving all of the component materials that go into electric cars, and the electric vehicle market obviously stands to meet with some tailwinds as oil spikes above $120 a barrel, and people look for alternative fuel sources and different arrangements for transportation. So in the electric vehicle space, another battery company that came across our screens was SunRun. Solar batteries, looking at renewable and clean energy sources. Let's take a look at that chart and just see what might be coming out of a very long-term no-go downtrend.
Yeah, so this was like you said, an exciting opportunity to talk about because of some, we are humans and we do get interested in what's happening around the world, even though we try to be as objective as possible. It is an interesting idea. If oil prices get driven to these extremes that we haven't seen for such a long time, will that offer up some opportunities in some alternative energy? And so this one came across our screens on Monday as entering a brand new fresh go trend here after a significant no-go that had taken price much lower. We also like that this break of the trend line, we see then a retest, an amber bar as the oscillator bounces off the zero line, and then the go trend takes hold. So you can really see all the principles really of go-no-go playing out in this chart. The oscillator at the beginning breaking below zero, telling us this go trend might be in trouble. Then when the no-go trend takes hold, the oscillator stays below zero the entire time, as it should, finding resistance at zero, giving us these no-go trend continuation opportunities to take part in the trend. And then this time when it was unable to find resistance, we see it break a significant downward sloping trend line. And then we see the color change, oscillator now providing support, Really a beautiful chart in terms of how I like to analyze the charts from a go-no-go perspective. And now we can see that we're in the early stages of a go trend. Painting aqua bars, we'll look to see now going forward, the oscillator can stay above that zero line.
And that's really how both you and I learned technical analysis from the CMT Association and during your time in the industry, understanding the concept of polarity. So what was support when we've broken through that area becomes a resistance level. So with go-no-go oscillator, we're seeing the resistance at the zero line, right? All else being equal, negative momentum continues until you have a real change in the supply and demand relationship. Same thing with that downward sloping trend line. That's an area of resistance until price action breaks above that, and we see that retest as the go trend begins. So a lot of classical sort of foundational concepts in technical analysis that just scream at me right off this chart. Really well illustrated, and thanks for taking us through that, Alex. I know we talk mostly to the long side, but we want to run through just a couple of examples of short trade ideas and how the trend principles work to the downside. So first, let's take a look at Lululemon, Alex, LULU. Lulu has certainly been a lemon for the last several months. And
I like what you did there.
let's talk a little bit about the icons and the use of the oscillator as for those who are trading to the short side. To look for those trend continuations.
And again, coming out of the themes and being able to position yourself perhaps in the sectors that perform the best, or if you're taking a short trade, the sectors that are underperforming on a relative basis, it all comes from our sector analysis that we did at the beginning. So Lululemon in the discretionary sector has been in a no-go. You can see the oscillator below zero. You can see the no-go in place. You can see resistance breaking down out of squeezes several times. This came across the desk on Monday because of a fresh no-go after a couple of amber bars. So price had rallied enough actually to get a couple of go fish bars painted, but the oscillator remained at the zero line and has eventually now broken back below zero into negative territory. So we saw this new no-go. We know that the discretionary sector is underperforming, so perhaps it's still okay to enter this trend to the downside. So that's how that one was working out on Monday.
Fantastic. And another example, actually out of the healthcare and pharmacy areas, Certara, CERT being the ticker. Another daily idea that you published out to all of our subscribers. Let's talk about this range here, Alex.
Yeah, this was a very clean channel, just slightly downward sloping. Again, lots of these no-go trend continuation icons as we go through. Interesting to see them line up towards the top of the channel. I was looking at this maybe a week and a half or almost 2 weeks ago because it really tried to get out below the channel, but it went back in. And what was interesting was the fact that the next high wasn't as close to the top of the channel. It's right in the middle. And that's interesting. That often happens right before a significant break. If we don't get back to the high of the channel and price rolls over, setting a lower high, that's interesting to note as well. And then, of course, we got the no-go trend continuation icon this time on the break below the channel and moved lower. Now, on a really, really traditional sort of technical analysis in terms of measured moves and projecting price targets, we probably hit it already here on this day. One of the ways we can measure a target from a pattern such as this is the width of the channel is often a good target to set. And I think we probably just about hit that target here after those 3 or 4 or 5 days lower. And so just as an aside there, that's a way that we can look for targets out of patterns like this.
Absolutely. Well, thank you, Alex, for walking us through that and again, keeping us all on the right side of the trend, either upside or downside. Let's talk about something that's really starting to shine. Rocks over stocks, Alex. That's the name of the game right now. Why don't we pull up a chart of gold? And let's first look at this on a monthly basis. We just concluded February. We sent out launch conditions to all of our institutional subscribers. That's a chart pack that looks at very long-term trends across all global asset classes and indices. a lot of the analysts that you and I work with have been peeking around at gold now for a while, as this cup and handle pattern is really quite clear to everyone. Of course, it's not a cup and handle pattern until it completes and we break out of that right side. Time to check in on this, as it looks like we are completing that break on a monthly closing basis here in March.
Yeah.
We'll see what the next few weeks play out as. But talk to us a little bit about what you see from a trend perspective.
Yeah, this is really exciting for all the gold bugs out there, because this is something, like you said, that we've been watching for years.
Mm-hmm.
And this last year of gold being really frustrating for investors was really because it was in this consolidation pattern, which is the handle of this cup and handle. Now, there's an aggressive way to read a cup and handle where you downwards slope the handle, and people were excited because we broke out of that a few months ago. But the sort of more conservative, and you'll see this in the textbooks a lot as well, is the actual break of the cup lip, the left side
horizontal
high,
resistance level.
the left side high and the right side high, this horizontal resistance. And if you sort of zoom in a little bit, we are just about closing on a monthly basis above that level. Obviously, we're still in the early days of March. But we are closing at the moment above that level. So really exciting time. We also like to see, from a go-no-go perspective, conditions break down or improve, depending on how you want to look at it, as a pattern develops. And what's very, very nice to see here is right from sort of the middle of the pattern, we saw the oscillator break above zero. We saw the trend colors struggle to be maintained here. We sort of could tell from that perhaps this no-go was really in trouble and over. And then as we went back into the run up the other side of the cup, oscillator back above zero. And then throughout this handle, support being found and a breakout of a go-no-go squeeze on the monthly bar that is at the moment breaking above resistance.
So for anybody who hasn't been participating in that gold trade, it's a common inflation hedge. It's thought to be a safe haven asset in times of high inflation. And again, we had CPI reported today at 7.9% through the month of February. So you're seeing more and more interest, not just from individual investors, but also from institutions in terms of where they can put capital to work. I think the long-term perspective is that the recent rally, if we're looking at daily and weekly charts in gold, has been impressive. But above this horizontal resistance line, this decade-long resistance, really the sky's the limit. Gold is at all-time highs at that point, and we'd be off to the races. So something to keep in mind as we're looking at portfolio allocation through the rest of 2022. And we'll keep you abreast of what we're seeing from a go-no-go trend perspective.
Yeah. And Tyler, I think we're going to have to wrap.
And we are going to have to wrap. Alex, thanks so much for all of your work on GoNoGo Charts. Thank you all for watching us. If you're here on YouTube or on StockCharts TV on demand, wherever you download your apps. Thanks so much for being with us, and we'll see you again next Thursday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.